Thank you for joining I Am Possible, which is India's first future tech meets sustainability podcast. Today, I'm delighted and honored to have with me Mr. Omar Syed, who has been part of companies such as NASA, Yahoo, Zynga, and is currently the co-founder of Shardeum, which is built in partnership with Nischal Shetty, who's the founder of WazirX. So, Omar, really appreciate you taking time and being part of the podcast. You have been part of some fantastic companies, and your master thesis was in neural networks and genetic algorithm. So, why don't you start with a brief introduction?
Yeah, so my background is in computer science. As you mentioned, I did my bachelor's and master's at Case Western Reserve University. Immediately after graduating from my bachelor's, I actually started working at a company called Raytheon, which is a defense contractor to the US government. And I was in their missile systems division. I did that for a year, and at first, when I graduated, I was really into hardware, wanting to build ships and so forth. But my, degree was actually in computer engineering, so we covered both hardware and software. And in my final year, I took a course in artificial intelligence, and that was like 1988. And I was really attracted to that. So after a year working at Raytheon, I wanted to go back and complete, and do a master and, focus more on the artificial intelligence and software side of things. So I started that program, but then shortly after, there was an opportunity for me to join NASA. And in my work at NASA, I was working in the Research Analysis Center, where we were helping principal investigators that actually ran the experiments with collecting data from the experiments and doing post-processing and analysis on that. And so I was able to apply some of the things that I was, learning in my master's in AI to, help these researchers use AI to, separate the signal from the noise and find, patterns and things like that in the data that they were collecting. So it was really interesting work. And around like mid 1990s, I think like 1994, I came across the World Wide Web, and that was like just kind of it just captured me, kind of, like, wow, this is pretty amazing stuff. Like we can now start sharing information in a way that makes it really easily traversable. I immediately joined the team that was working on web technologies at NASA. And one of the things that we developed was called, what was that? The NASA Technical Report Server. So basically, NASA scientists write lots and lots of technical reports and papers, but all of those papers are, kind of like in their internal databases, but it's public information. I mean, it was paid for by the public. So one of the first things we did was, made this information searchable and accessible through an online, database and website. And then from that, I also built a lot of internal, what they call intranet kind of products for NASA. And I was also involved with the team that was hosting the images that were coming back from the rovers that had been sent to Mars. So this was like 1996. Wow. That was the first rovers that were sent to Mars at that time. And we completely didn't expect this, but once we started like allowing the public to download the images that were coming back, our servers got slammed. Like, I think we were at that time probably the most, traffic visited website for, a few days. And so we quickly had to learn how to scale up our systems and how to keep them running and so forth. So learned a lot from that experience. So from that, then I was invited to join Yahoo. Ended up re-architecting a lot of their backend systems, their whole request routing system, their caching system. And we were able to get like several patents on these technologies too. And so from that, then I joined Zynga. Zynga is the company that had made Farmville. Also, after that, I joined various startups. One of them was building sentiment analysis for stock market data. So we were like one of the first companies to collect what people were saying on Twitter and various other sources, social media sources on the internet where people talk about stocks, and bring all of that data together, run a lot of, lexical analysis, and determine the sentiment of the authors. And from that, we could basically tell you, which stocks people are happy about and which stocks they're, feeling negative about and so forth. And we actually were able to back test this data that, on actual stock market data. And we found that our system was beating the S&P 500 by about 25%. So that was pretty huge.
What made you take the dive into blockchain and cryptocurrency world?
Uh, that actually started, I would say, back in 2008 when I was following Ron Paul. He was a presidential candidate here in the US. And he would oftentimes talk about how we need to go back to a sound money system. And at the time, I had no idea what sound money meant. So I had to look that up. And, as I researched that and, found that very interesting, started also researching the history of money and, how money evolved, where it comes from, where it goes, all these things, which I, was a big eye opener for me. Because like if anybody, like most people, they don't pay attention to where, money comes from. There's just central banks issue the money. That's all they pretty much know. And basically sound money means to back your money that's issued with some sort of a commodity. And the primary reason for doing that is so that the entity that you trust to issue the money doesn't, overprint the money, right? And create tons of money, which could cause inflation and so forth. And so you back it with a physical commodity like gold, and the issuer can only print as much money as they have gold to back it up. So, as looking at, why sound money is important, and I came to realize that, maybe we don't need to back it with a physical commodity. Maybe we can back it with something like human time and still give it the properties of sound money, where that money can adjust, the supply is, elastic so that it can adjust to meet the demands of the economy, but yet, it's resistant to inflation and deflation. And so I wrote an economic paper in 2011 called Sound Money Without Commodities. And so I was searching for a project that had existed back in the 1990s, started by a cryptographer named David Chaum. It was called DigiCash. And when I searched that up, I found that DigiCash no longer existed, but then I stumbled on Bitcoin. And, that was just another rabbit hole, which I think I still have not come out of. So yeah, as soon as I discovered Bitcoin, first thing I read the white paper. My background is in computer science, so I, was able to understand what that was saying. And it was just shocking to me that how somebody just, you know, kind of snapped these things together that had already existed to then solve a problem that had been, talked about for a long time, which is basically, the Byzantine generals problem, and how you achieve consensus in a group where you don't even know who all is in the group, right? So that was a really difficult problem, and he actually solved this without having to create any new cryptographic primitives or anything like that. So I was really attracted to the technology of what blockchain had created. So yeah, so that's kind of how the whole story of how I went from my interest in computer science to now working in the blockchain area. When I came across Bitcoin, I could see that this was not really designed to scale, right? I mean, it was, maybe getting like, at that time, it was getting less than a transaction per second, right? At that time in 2011. But I knew, like, if this really started to get popular, this would not be able to scale, because, when you design systems to scale, you really need to design them so that as you add more nodes to your infrastructure, you're able to get more throughput. And with Bitcoin, it didn't matter whether you had 100 nodes or 1,000 nodes. It was only going to get the same number of transactions per second, which was limited by the block size and the rate at which blocks were produced, right? So you're just not going to get more than that. And so around like 2014, 2015, people started to recognize that something had to be done about the scalability issues with Bitcoin. And, we saw conferences discussing how to scale Bitcoin, and, people publishing papers around that. And most of the solutions were, based on creating second layer solutions, right? Like lightning networks and, off-chain transactions and things like that. But I still felt that there was a lot of room to improve the technology so that even like on-chain transactions could go much faster. So in 2016, and by that time, Ethereum had also come out, and Ethereum had basically shown that you could pretty much do anything you wanted on a blockchain. It just didn't have to be about transferring coins. You could actually create contracts and have basically smart money, right? Programmable money. And so that was also a big eye opener. But in 2016, I left my consulting job to focus on building a more scalable blockchain. And, my goal of and reason for why I wanted to build a more scalable blockchain kind of ties back to that paper that I wrote on sound money without commodities. When I looked at how that could be implemented, I realized that using a system like Bitcoin would be essential to that, so that you could have a trustless system where the entities that are involved in implementing that system, you didn't really have to depend on any entity, even if they try to misbehave. The system was designed such that the incentives were aligned for them to cooperate, right? So, and in late 2017, I started putting a team together, and in 2018, we launched a project called Shardus, which actually is focused on building the block, the sharded blockchain technology. And Shardeum is actually using that as its core technology so that it doesn't have to start from, scratch, and adding the Ethereum virtual machine and smart contracting layer to that. So that's the backstory of how.
What an interesting journey you've had, right from building chips for Raytheon for missiles,
Yeah.
from your genetic algorithm to with NASA to for building scalable web services, and then getting into Yahoo for the live streaming, Zynga sentiment analysis for stock market, and laying down I mean the uh, giving us the lowdown on what is sound money and Bitcoin. I would want you to kind of like pull you back a little bit, because my audience kind of understands this and kind of bring it down to base level. But first, before we get into it, I would like your brief opinion on because you said you were invested in building chips for missiles. Maybe briefly you could talk about the growing role of AI and it being leveraged for building autonomous drones and autonomous robotics. What are your views on that?
I think the turning point happened like probably around 2006, when Jeffrey Hinton, came up with this idea of how to train deep neural networks, which, prior to that, maybe you could train networks that were like 5 or 6 layers deep, but now he was showing how you could train networks that were like maybe hundreds of layers deep, right? So that really kickstarted this whole field, and since then we've been starting to see a lot of applications of AI, and now we have systems that do phenomenal job at face recognition, speech recognition, even language processing, driving vehicles. I mean, it's just going to continue to keep expanding, right? And of course, the military is also going to use this technology. Not very fond of that application of it. I actually, we're living in an era right now where national governments have a lot of power, and I really, really think that for humanity to survive and go into an era where we become an interplanetary civilization, we really have to get beyond this nationalism kind of mentality that we're all living in nowadays. And hopefully that will come to change. The world is getting more globalized. We have internet, people interacting with people all around the world. You have things like YouTube with, vloggers traveling the world and shooting videos. So you can even just travel the world from your home, right? So we're becoming a much more globalized civilization. And I hope that eventually leads to us basically getting rid of borders, right? I mean, you should be able to travel and live anywhere you want and just be a citizen of the world and not be so like, oh, I'm an Indian or I'm an American or whatever, and just be tied down to some nationality or region.
Exactly.
And so, so I think that's a future that I'd like to see. And so I kind of got off the whole AI topic, but this is something that I do think about a lot. But hopefully, AI doesn't get used in bad ways, right? So that's the thing that I worry about, right? Like, so if governments start using it for drones and wars and things like that, that's it can really get kind of scary.
Exactly.
But there's also lots of awesome applications of AI that can make our lives so much better, right? So, but yeah.
just maybe 20 years back, I mean, India didn't have the opportunity to kind of interact and understand, and neither the world was not open, but this World Wide Web has created so much opportunity. It has given anybody and anyone an opportunity to understand about somebody who's sitting maybe thousands of miles away, and educate oneself, because I think today with MOOCs, massive open online courses, education is almost free or almost very negligible cost, so the only thing which is stopping an individual is the desire and intent. So there is so much opportunity.
Exactly.
And with this layer of metaverse coming in, possibly with this web 3.0, we will be creating this digital world which will not have borders, because borders and governments have always worked on kind of dividing people, not uniting people. And I think Metaverse Web
Exactly.
3.0 will finally unite people and create a world where it's not centralized, where the user also gets to play a role. So I'm super excited for that world. Would you like to start with explaining what is money? How has it evolved over the years, and the sound money, what you talking about? Maybe you can talk about that. And before you get onto that, what money is, how has it evolved over the years, and sound money, if you can give like a basic lowdown on blockchain, what is it?
Blockchain technology is really a way to create distributed systems that can all agree on keeping themselves synchronized, right? So in companies, when we build scalable services, we have to build distributed systems so that if any one computer goes down, the service still continues to operate, right? Now, it's possible to do that very easily in the company because one entity owns all of that hardware. And we don't actually have to think about things like, well, I don't trust that computer, right? Because we own all of the computers. Now, what blockchain actually does is allows us to do this same kind of a distributed system, but without needing to trust any one entity in the system. And so, the key is having many different entities controlling lots of different systems, but all of these systems are cooperating because of the incentives provided by this, blockchain system. Blockchain and the way Bitcoin uses it is just one example of a more general concept, which is really a distributed ledger, right? So you could have different ways of doing a distributed ledger. Blockchain is just one of them. And, the word has been kind of overused, I think, to apply to things that are not really blockchains anymore. But, I guess the best way to really, learn about it is actually for somebody to go back and read some of the literature on distributed systems and classical consensus algorithms and things like that. And then from that, you can get a better perspective of where Bitcoin and and its contribution of a blockchain fits in. Whenever we've been working with money in the past, we're all used to just having some central entity having control of our money. We actually don't have custody of most of our money. Like maybe we have some cash in our wallet. That's the only money that you really have custody over. The rest is probably sitting in some bank account or something, right? So, but blockchain technology now opens up avenues so that, we can experiment a lot more with, different ideas of money, right? And different even ways of how to do a monetary system, right? So, Bitcoin itself is multiple things, right? It's not just the unit of exchange, the Bitcoins, but it's also a payment network, similar to like a PayPal or a Visa. And it's also a algorithmic monetary system, a rule-based monetary system, which defines what the supply of the currency will be over a long period of time. And, it's chosen to have a fixed supply. And part of the reason why Bitcoin has gotten the level of appreciation that it has is because people, really like the idea of knowing exactly what the money supply is going to be, right? Right now, when the central banks tweak the money supply, you have like the Federal Reserve increasing interest rates or printing more money and, buying assets and, putting money into the market, things like that. Nobody knows what the next move is going to be. It's very uncertain, right? Like, so how can you make long-term contracts? Like, let's just suppose I wanted to rent some, you know, building from you, and we wanted to do like a 50-year contract on that. We have to build in clauses for like, oh, inflation and all of that, right? Because we know that, the money supply is going to be most likely expanding. But wouldn't it be nice if, people knew ahead of time what that supply curve is going to look like for the next 50 or 100 or 200 years, right? That would allow us to make, long-term contracts and, deal with our money in a much more certain way, right? So that's one of the reasons why Bitcoin has become very popular. Now, in this paper that I wrote in 2011 of Sound Money Without Commodities, one of the things that I noticed when I was studying the history of money was that in ancient times, people actually had a very decentralized form of money, right? Okay, so what was that? It was actually shells. If you go back into the 1800s, they were still using them. And that system had been used around the world on multiple continents for centuries, So why was it so decentralized? Well, there was no entity who was issuing the cowrie shells, right? And anybody that was out of a job and had no other source of income, they could go to the beach, collect, shells, bring them back to the market, and maybe, buy some bread or something with it, right? And at least not go hungry. They would have some safety net. But then over time, as money evolved, the kings and so forth wanted more and more control of the money. And, then you were only allowed to use things which were deemed to be money, like stamped coins and things like that, as money. And then that went to paper money, making it more convenient, which then eventually, when the telegraph system came out, started becoming electronic money, and eventually led to the era that we're in, where, it's like 99% of our money is electronic money, and there's a little bit of cash just to kind of make us feel like there's still money, But so that's how, money has evolved. And over time, the thing that's happened is we've lost, in exchange for convenience, we've given up a lot of the decentralization, and money has become more and more centralized, right? Nowadays, it's so centralized, we have central banks, right? I mean, it's even in the name. And so it would be nice to bring back some of the properties of sound money and decentralized money, but in an electronic form, right? And Bitcoin goes a long way in achieving that, right? So there's no one entity that's issuing that money. Anybody can participate in the system and try to mine Bitcoin. However, the supply is not elastic, right? And so what will happen is, you know, you can think of Bitcoin as like an island, and as you know, there's a fixed amount of land on that island. But as more and more people start coming to that island, the price of land is just going to go through the roof, right? And so it's going to be very deflationary, right? So, um, and so that's also not a bad thing, but it would be nice if things were stable. I mean, for day-to-day commerce and trade, it's much more easier to work with a currency that's stable and is, you know, resistant to inflation or deflation. Um, so in that paper, you know, I Sound Money Without Commodities, I describe a system where we could give a fixed amount of money to every individual, you know, regardless, right? It's basically unconditional, universal basic income. And along with it, we would just have a small, you could think of it as a currency tax on the total amount of currency that you have in your account. So like maybe, you know, a small like 1% of a percent per day gets deducted from your total balance. Now, these two basic rules actually lead to a very sound money supply, which can grow and shrink based on the number of people participating in the economy. And it'll be able to maintain a very stable price over a very long period of time, right? So it would be an ideal form of money to use for commerce and trade. And I've actually written a sequel to that paper called Getcoin, Global Electronic Trading Coin, which actually, you know, builds a little bit more on these rules. And so, you know, that I would eventually like to see that form of money, you know, somehow get implemented in the world. And I think that would be wonderful, right? Because if you think about it, as we head towards a world where, you know, automation becomes more and more prevalent, it's going to be more and more difficult for people to sell their labor in order to earn some, you know, money to just to even survive, right? Even if you had nothing, you could probably go and find some piece of land and, you know, grow your food, you know, raise some animals and live off the land. Nowadays, everything is taken, right? It's like the only thing a new person coming in this world who has nothing can do is sell their time and labor, right? And if even that commodity that people have becomes, you know, commoditized with AI such that human labor is not needed, then what do we do, right? How do humans survive in this, you know, game of life, right? So the only way I see that happening is where we have a new type of a monetary system where every individual receives some basic amount of income on a daily basis. And then, you know, to prevent that money from inflating over time, you can have a very small, you know, currency tax. It's also referred to as demurrage. And it can even be as small as like 2% per year, right? So that kind of a system, I think, is going to be necessary for the long-term survival of, you know, the human species and you know, our civilization. So yeah, I think it's definitely inevitable,
Yeah.
and we will see that kind of a money system come about sooner or later. but I'm trying to do what I can to make it happen sooner.
Today, there are some 6,000 plus tokens, so they're all fighting to, be that special future of the money and things like that. And then there's Deloitte, which released a paper, I think back in 2021, that fiat currency might make way for, cryptocurrency. So that, but you also mentioned that automation, the growing role of AI, taking away our jobs. That is such a conversation, I think, which we need to, look at, because I don't think people are paying attention towards that, the impact of automation and the growing role of AI. Would you like to talk about maybe, the partnership with WazirX? And what are you building over there with WazirX?
So there's an interesting story behind that too. So when we created Shardus back in like early 2018, one of the things that, we have a token for Shardus, and we wanted to get our token listed on some exchanges so that it would show up in coin market cap and things like that. And so one of the exchanges we talked to was WazirX, and WazirX was just getting started at the time. And Nischal met with me, and I explained to him our vision of what we're trying to build with Shardus, which is basically a sharded, distributed ledger, or you can call it a blockchain as well. And the approaches that we were taking and what made our approach unique and so forth. And he really, really liked the idea. And he's a very technical person as well. He literally coded up the first version of WazirX himself. So, and so Nischal had been following our project, and in late 2021, we did a presentation where we demonstrated a 1,000 node network, which was sharded. And we showed that as more nodes joined the network, we're able to get more and more transaction throughput. And with 1,000 nodes, we were able to achieve, 5,000 transactions per second. So out of the blue, Nischal contacts me. I hadn't heard from him for 4 years, and he says, "Hey, I have some ideas that I wanted to bounce off of you. Let's meet up." And so we met up, and he basically said that he's interested in creating a smart contract platform, and would we be able to use the Shardus technology that we built over the last 4 years to accelerate that, right? To make a sharded blockchain that has a smart contract platform. And so we went back and talked to our developers, and we looked through all the things that might become an issue, but we realized that this could be done, and it could be built on the technology that we had been building. And so that's how we ended up partnering together to do this. And so yeah, it's great. I'm now able to focus just on the technology side. Nischal focuses on the marketing side, and it's really a good collaboration that we have. So
Right. What are the applications you think will be able to be built on your platform?
See, the key to these platforms, I think, is being able to keep the transaction fees low, right? Because when the transaction fees are low, certain applications become possible, which otherwise would not be possible, right? So let me give you an example. In 2016, I was doing some consulting for a local restaurant here that wanted to use blockchain to issue coupons, right? Issue some points. So you would go to the restaurant, maybe you bought, a meal for $10. They want to give you like maybe 25 cents in their tokens. And you could have this now on the blockchain. And there's benefits to doing that, right? Because with physical coupons, there's a cost to actually making the coupons. making sure that nobody makes copies of the coupons, all these kind of things. But if you have it on a blockchain, it's very nice. And even, if I have these tokens for this restaurant, I can even give it to my friend and tell him, hey, why don't you try this place? It's really good. Here's some, tokens that you can use and so forth. So there's a lot of benefits to doing that. But when we actually tried to implement this kind of system, we found that at the time, this was like in late 2017, 2016, 2017 kind of time frame, that the cost of doing a transaction to send the person the tokens would be anywhere from 5 cents to 20 cents, depending on how busy the Ethereum network was at the time, right? And so that just didn't make it feasible to do this, right? So, but imagine if the cost of a transaction could be maintained like, a penny or less, right? Then these kind of things become possible. So I can imagine a day when almost every business has their own token, right, that they can use to incentivize loyalty to their business. So there's a lot of applications that can come, and I think we're just, hitting the tip of the iceberg.
What are your views on India's digital rupee and the 30% tax, the crypto gain tax on NFTs?
Yeah, so I mean, I'm really happy that at least now, the uncertainty has been removed from whether or not cryptocurrencies are going to be allowed in India. So once the government says, okay, we'll tax it, that's when that you can definitely buy it. And keep in mind, it's only when you sell it, right? So if you don't sell it and you just hold it for the long run and let it continue to appreciate and sell as you need later on when you really need to sell, even though we're starting with a tax of 30%, I think it'll become more in line, as more politicians also start getting into cryptocurrency, and they also, I'm sure, don't like paying the taxes and so forth. So it'll get better over time.
Right, right.
And the younger generations they're very used to cryptocurrencies and metaverse and virtual goods, and those guys are going to become our future politicians, right?
Exactly.
And so things will change.
You said holding cryptocurrency, but how do we create a currency which we can transact, on a regular basis, because the problem with these cryptocurrency is that, we are holding it, until the time we are just holding it, that I don't see it as becoming a exchange medium. Address that, and B, also talk about this one group which says that whole decentralization is a complete scam, and there's Jack Dorsey and Scott Galloway, who are the major proponents who are saying this. In fact, Jack Dorsey tweeted that you don't own Web3, the VCs and their LPs do. It will never escape their incentives, and it's ultimately a centralized entity with a different label. And in fact, Scott Galloway, I think, had written a paper where he addressed that how the whales hold the maximum amount of the funds, like the 9% of top account holders who owns, I think, 80% of the 41 billion market value of NFTs on Ethereum. Then the top 2% of accounts of Bitcoins own 95% of the 800 billion supply of Bitcoin. So would you like to address that?
One of the things that I've thought about for a long time is, how to create a currency that is fair for everybody, is decentralized in the sense that it's not issued by some central entity, and then also is can be used for day-to-day commerce and trading. I think the key to it, there's a few things that are key to achieving this kind of a currency. The most important is for a currency like that to have a stable price, right? And by stable, we currently think about national currencies, like the rupee or the dollar. But on a very long-term view, like if you look at maybe a 50 or 100-year view, these currencies are getting devalued like crazy, right? A haircut like the 1970, it might have costed you maybe $1 to get a haircut, right? And now you pay like $20 to get a haircut, right? So you can see that the money is actually getting devalued. It's really not stable. The world actually has never had a stable currency, right? So, but we can achieve that with a system that has unconditional basic income and a currency tax combined. So we can actually achieve a stable currency that can be used for day-to-day trading. So the key thing to it is having it be very stable. And then the other is adoption from the merchants, right? So merchants accepting a currency just changes the whole landscape, because it's really the merchants that can determine the value of a currency. And if merchants aren't accepting it, it doesn't matter. It's going to be really hard for people to justify holding that currency. If you have a currency which is being given to every person on a daily basis, even if I spend away all my money today, tomorrow I'm going to get some more, right? And so now merchants will see that, wow, everybody has this. I'm definitely going to add this as a new form of payment, right? So without having to make it like legal tender and a government forcing you to accept this, merchants will voluntarily want to accept something that everybody's holding. So, so having something that's given to everybody on a regular basis is also important to get that widespread adoption. Yeah, so that I think that's achievable. And the Getcoin paper actually describes that and talks about it. So the other part of your question was, the whole decentralization aspect of these, cryptocurrency projects. And there are some people that say that decentralization is not even that important. And I kind of disagree with them, because I think decentralization is one of those things that's like insurance, where if you get insurance, like car insurance, most of the time you don't use it, but when you have that accident, you really feel the need for it, right? So decentralization is like that. And you also mentioned that most of the currency itself is owned by a few entities. That's true, like, in most of these top coins, and maybe even more so in the smaller coins. And it's almost kind of like jumping from one world where, in the fiat world, the fiat money is really owned, and majority of it is owned by, like 1%. And then the 99% is sharing the rest of that currency. It's almost like going from one bad thing to another bad thing, right? But I still think that it's worthwhile to do that, because we want a world in which there's currency competition, right? Let the people have a choice in what currency they want to use, right? So, if a currency is really lopsided in the ownership, well, I mean, if people still want to get into it, it's their choice, right? And so I think for that reason, it's really still important. And I think over time, things will get better. That currency will dissipate more, and will probably get more closer to like what do they call that? There's a distribution I'm forgetting the name of it, but it's basically like the 80-20. Like, naturally all things kind of tend towards like an 80-20 distribution, right?
Right.
So I think as time goes on, we'll probably get closer to that.
Right. Yeah. So I think we're in such an exciting space. I mean, where we go towards the humanity, I mean, it's anybody's guess, because there's this all of these converging technologies, and these technologies are growing more potential than us humans. We are in an exciting space. Omar, really appreciate you taking time and being part of the podcast. My last question to you: your moonshot, your roadmap for Shardeum.
Yeah, so basically, we're shooting to have the Shardeum mainnet launch by the end of this year. And we are working very hard to be one of the few cryptocurrency projects that delivers on its promises. I mean, people have gotten so used to seeing these roadmaps and, promises that actually never get delivered quite on time. But we're working really hard to try to achieve our milestones for Shardeum. And I do believe that, once people see what Shardeum can offer with the low transaction fees, and while still maintaining a really high level of, transaction throughput, it will allow us to enter a new era in terms of what kind of decentralized applications can be built. So,
Right.
and that's the ultimate goal.
Thank you, Omar.
Yep.
Really appreciate you taking time and being part of the podcast and sharing your insights. We are genuinely living in an exciting time. The Web 3.0 we all talk about, and we're laying the foundation for the metaverse that we talk about, artificial intelligence, which is going from becoming artificial narrow intelligence to artificial general intelligence, possibly maybe in a couple of decades. It's an exciting things because all these technologies are converging. And it's so important that we need to direct it in a place where we do not repeat the mistakes that we have been making through history, or capitalism, or governance, the wrongs with the education, the wrongs with the healthcare. We have a choice to kind of correct it and truly find a way and create businesses and experiences which is adds to human wellness, and I think that should be the goal, because technology should be human first. And I think, we talk about blockchain, decentralization, the metaverse. I hope that this tomorrow that we are creating is beneficial for all. On that note, I really appreciate you taking time for being part of the podcast. And to my listeners, if you like what you see and hear, then please press the subscribe button. Until next time, see you guys. Bye-bye. Thank you, I really appreciate this.
Yeah, thank you so much for having me.